So, Simo, thank you for letting me know. I think now it should be just fine. It's capturing the sound really in a high quality. I think so. I will appreciate if you give me a feedback in regards to the noise. Okay, so I'm gonna repeat everything that I said, but thank you for letting me know, Simo. Simo, you should be able to hear me now. So let's start again. Let me da, 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 da. Let me just okay. So so hopefully you can hear me, all of you right now. Okay, so capturing the sound. One, two. Hi Emma. Stuart, can you double check please? Yes? Okay, so we're good to go again. I'm from Morocco, Simo. Welcome. So you can hear me, I think. Um, okay. Hello, everyone. Hello. Merhabalar. Hi, everyone. So a very important day. Yes, we can. Perfect. So let's start again. So as I said, tonight, more precisely, it says at 6 o'clock GMT is the FOMC. All the attention is on the yes, is on the Mr. Powell, more precisely on the dot plot tonight, guys. Okay, that's why we have seen a bit of a different, not different market. I mean, the sentiment has changed a bit this week. It's not because things are getting better or something, and that's why we've seen stocks rebounding a bit. It's on the anticipation of what Mr. Powell today, Mr. Bailey tomorrow, the banks in general, how they will respond on this banking crisis that we have seen the last 2 weeks. Okay, so it's this anticipation. So I will. Hi everyone. Hi everyone. How does gold? Please. Okay. We're gonna see gold in a minute. So allow me to just start with dollar because I want to let you know what we are expecting from the Fed tonight. Okay. So let me share the screen. Okay, so perfect. So let's start with dollar. Okay, this is the daily time frame for dollar. As you can see, in general, in March, the dollar has been under pressure. Okay, under pressure is down to 102.60 territory. Struggling, the banking crisis is something that added further pressure on dollar. Okay, but also let's not forget that on the background, in general, we're expecting from the central banks to reach that we were expecting that they have reached their peak in regards to the interest rates, but apparently that's not the case so far, but we are nearly to the peak. It seems so. All this is something the fact that potentially we're gonna see confirming the pause of tightening or even potential cuts is something that has driven like priced in, okay, priced in the dollar. Okay, so but let's take a step backwards. So over here is as I said, the daily time frame for dollar ahead of the FOMC tonight. So ahead of the FOMC, we have seen treasuries finding some buyers, something that is negatively correlated with dollar and with gold as well. We're gonna see gold in a minute. So what is expected tonight, guys, from the FOMC is actually to okay, other than revising their forecast, but what is key tonight is to confirm a 25 points increase from the Fed. These are market's expectations. Okay, a 25 point increase is now the overriding expectations in regard as the in order the policy makers to fight inflation. But to be honest, it's not the rate, it's not the okay. Obviously, whether we're gonna see 25 or whether we might see a surprise of 50 points, or we might, or whether we will not see anything is important. But especially after the banking crisis, is important. It's more important to see the press conference from Mr. Powell, and and whether he will what he will what hints he will provide in regards to the dot plot, the estimates that they have in regards to the economy. Also, we expect Mr. Powell to reiterate the importance of fighting inflation and to take a page out of what Ms. Lagarde confirmed the last 3 days. So Ms. Lagarde was speaking earlier in the morning. I mean, she was speaking 3 days in a row. It was Monday, Tuesday, and today as well. And she confirmed that there is, how can I say that? There is no, I think if I remember correctly, there is no trade off between price stability and financial stability. So will this is something that we're gonna see from the Fed as well, from Mr. Powell as well? Will he also assure the Fed is monitoring financial conditions and will supply liquidity as needed? So eyes are mainly on the press conference, as I said, and the dot plot. Okay, that will be of significant importance. So yeah, because they are dot plot is being used as signaling tool as well. So that will present whether we're gonna expect any further rate hikes ahead as well. Okay, that's why it's key. So we might see volatility, greater volatility during the press conference, which this is usually the case, rather than the actual announcement of the rate decision, which is half an hour earlier. Let me double check. I think it is. There's around a 30 minutes difference, but yeah, 30 minutes after. But the statement is anyway is posted earlier. So what else? What else? Okay, before I okay. Hi Andrea, if Fed announced the pause, which is not so likely, on interest rate, will it be bullish or bearish for the euro dollar? I'm not sure whether I can reply to you, Amanze, because a pause, like if we strictly take this, that's a great question, by the way. I will keep it in the over here. So a pause of interest rates, okay, is something that usually or theoretically, okay, could pressure further the country's currency. But remember that we are not really the last few years, and especially the last few days, things are not. I don't want to use the word normal, but it's not something that we're facing. I mean, really often, and we've seen some really bizarre reactions from the markets, at least in the during the announcements. So theoretically, if a bank announced a pause or cut of interest rates, this has a negative effect on the country's currencies. But tonight, it will depend also, it will depend, I mean, when we cannot really tell how the markets could react. Depends, I mean, especially depends on what Mr. Powell will have to say, okay? We still have a high inflation. We still have the banking crisis, which even though they have sorted it out, they have given this assurance that they will protect the depositors, they will provide liquidity, and etc. We're not sure whether this is over and is not well behind us, right? It was just this Monday that Credit Suisse issue was kind of sorted out. But so what I'm trying to say, Amand, is that the markets and the market participants are still sensitive, and they still worry in general about the financial stability. So we might not see the theoretical reaction that we expecting, because we are not living in a we are not in a period that there is nothing else than the Fed decision. I mean, we on the background we have a lot of things going on, right? Still a high inflation, this instability in the financial sector, not only in the US but also in the eurozone. Um, so, okay, I'm not going to mention the Russian invasion because it's been a year. For the time being, the geopolitics, okay, geopolitics always are in the background, but in this case, it's not what is driving the market right now. Bertwell, I am using a webcam, but because I'm broadcasting at the same time in YouTube, I cannot enable a camera in both YouTube channel and go to webinar. So I will, you know what? I'm gonna share the YouTube link with you if you want also to see the camera on. Just give me a second. So, guys, if you want to join us via YouTube instead, feel free. Now, Manze, it was a great question, actually. Great question. So, let's take one by one the questions. Okay. Okay. Gold. Okay. Gold one was one of the key beneficiaries on the banking crisis, on this market turmoil that we faced the last 2 weeks. Where is it? Sorry for that. By the way, sorry for that. I have highlighted, if you've seen, this area over here. So the floor, this 102.60, and in general the 102 territory, is a floor that we have seen again in the back in February. So we've seen a full reversal from the very first week of February. So it has already, I think, has already reversed more than 60% of the gains that we have seen in February. Yes. So this is a very, very important floor over here. Is the confluence of February support, but also the 60%, 61% Fibonacci level. Okay, so you can understand that at least from a technical perspective, if dollar manage to break and confirm a closure and a further extension below that level, then the next real floor, the next real support that we can find is taking us back to years lows and the 101 territory, or even 100 territory, 150. If indeed we see the dollar breaking and confirming the move further below this area. For the time being, for 2 days in a row, it's holding this floor, above this floor. So let's wait and see tonight what will happen. Okay, but have this in mind that uh, this is considered as a strong support area. 61.8 is the most important retracement level, Fibonacci level. So that could open the door to 101 territory. That was for dollar. Intraday is a lot of consolidation going on, as you see. This just the market is being cautious and waiting the announcement. Gold, as I said, is gained significantly on the banking crisis. Every single time it's a safe haven after all, right? So every time that there is a lot of indecision, a lot of fear, then there's a lot of cash flow into the safe havens, and dollar is one of them. So we've seen gold spiking to 2009 territory. That's an area that we haven't seen since the Russian invasion. That we haven't seen the gold testing these areas for a year. Uh, but this week, um, the increasing risk appetite uh, has pulled back gold to 1930 territory. But the interesting thing over here is this formation over here. Not confirmed, obviously, but this looks like an instant formation. Not confirmed. We need to be a bit patient and see whether indeed we're gonna see another leg lower from gold, in order to suggest that it might revert back down, back to go lower and move again back below 1900 territory. For the time being, as I said, the fact that the yields turn higher is negatively correlated with gold, negatively correlated. So that's why we've seen this pullback, and we've seen gold at 1930. However, dear Simo, you asked for gold. Uh, the momentum is still positive. This is a daily chart, by the way. Despite this pullback, MACD remains positive, and the signal line is keep pointing upwards, and RSI holds above 60. You see that? Okay. While, let me double check that this is my, okay. Okay. Excellent. So, so for the time being, the positive bias dominates overall gold. You see, it remains above the 38.2 Fibonacci level. It was a significant pullback, but since today so far it is holding the floor, yesterday floor, we don't have any sign of whether it will extend lower. This looks for the time being that a bit neutral, and we're gonna see we're gonna have a clear uh, uh, picture in regards to the goal, obviously after the Fed. So, but I would like to highlight you, or to let you a bit to keep monitor this formation, because it looks like an instant formation. So let's wait and see. This is the daily chart anyway. So it would be very helpful if you check tonight how the daily candle closes. So let's go down to the 1 hour chart. We can do some intraday analysis. Okay. Actually, oh, okay. I put the 4 hour chart because I want to show you, firstly, uh, I want to draw your attention a bit on this area over here. As I said, the pullback, let's go down to 1934 territory, right? And it's holding above it since this morning. This support, it used to be a resistance area last week, okay? Last week. So the if we've seen the gold turning further down, okay, then the next floor would be below 1900, more precisely at the 95, which is our latest fractals. You see that? I've used fractals. So this is the next support territory if we see the asset breaking and turning below today's 2 days floor. That's that's for the analysis, guys. Okay, so I'll put the 1 hour chart just for you to see it. You see that? So what is the issue over here? Even though the momentum intraday is negative, um, with RSI holding is at 37, pointing again that lower one is negative. Stochastic is ready to post another bearish cross over here. However, um, if I zoom out, can you see this red line? This is my 200 exponential moving average. So this is quite crucial because the asset could find support at the 200 exponential moving average. So uh, we might see some kind of a swings in the press conference or general tonight, some swings, but we might not have a complete breakout because this is a strong support level. 200 this is a strong support level. It held, it held above it for 12 days in a row. So even though gold is looking that is retesting again and again the 1934, it might fail to break 200 exponential moving average. Okay, so keep an eye on that. But on any swings later on today, due to volatility or something, this area could be retested. The 1924, 1924. Please remove indicators and see clear. Of course, why not? Let's do some price action. So this is the 1 hour chart as Imran advised. So Imran, I'm doing this because many of you use indicators, some others don't. So I am going to cover as much as I can. So consolidation, right? Ranging. With or without indicator, I can see with my naked eyes that this is the next support, right? It used to be support, it used to be resistance, so nice floor. If and only if we see the asset breaking yesterday's and today's floor. Okay, to the upside though, to the upside, we discussed a bit about to the downside, but we haven't discussed about the upside because anyway, a dovish policy tends to support gold, right? So a break above it, okay, a break above the highs, today's highs, above the 1946 territory, could open the door to this area over here. So this repeated floor that we have seen this week. It was retested once, twice, three times. This is somewhere around 1963, 1965. So if I have to find the very first resistance area, it will be based on these tails. It will be the 1962 territory. Okay. What is triggering my attention since the beginning of the week for the 1 hour I don't get what that's it. Yeah. Oops. So, what is like bothering me a lot, and I've seen it since I've seen it yesterday as well, is the fact that can you see we are in the 1 hour chart, by the way, guys, old 1 hour chart. Can you see that? Does it look like a head and shoulders? And it broke, it turned lower, but the question for me is whether it will extend further down or is running out of steam. Just food for thought. Oh, zigzag. Yes. Yeah, yeah, yeah. Yeah, call it zigzag or M formation, M formation as well. So yeah, food for thought. put it on your charts just to keep an eye on it. Obviously, it broken lower, but if it's indeed an M formation or Z, I don't know how many of you are aware of F formation in trading or W formation, etc. But well, we have done several webinars for this kind of formations, things that are not so that we cannot easily spot, but if spotted, they are quite helpful. So it's looking like it has shoulders like an M formation. So the question now is to see whether so after an M formation, usually we have a correction before another attempt to the downside. That's why you need to keep an eye whether we're gonna see another swing higher, which should be below this neckline. Okay, it should be below this neckline, and whether it will fail to break it or not. Because if it fails to break it and we see pulling back, then this floor will be again in the into we drive our attention again. I cannot analyze right now the M formation, but try to find out either from our webinars or from uh, or in Google as well. Type head and shoulders or M formation. Try to remember the precise name of this one. It's not an M. Okay, for me it's head and shoulders, but in head and shoulders, usually when the neckline breaks, this is the neckline, when the neckline breaks, we usually, theoretically, we should have a swing higher. We didn't have a swing over here, we had a bit of consolidation. So um, it would be very interesting to see whether we're gonna see a swing higher below neckline, because if it's above neckline, that means that we have more bullish bias, so the asset could return back higher again. But if we have a swing higher below the neckline and we see it turning back down again, that then means that we might see that it was just a correction before another attempt to the downside. Okay, guys, so be careful, be careful. Let's move on. Whew. Let's move on. What was the next question? Hello, everyone. Guys, you can ask anything you want for any asset you want. Okay? Um, can I with dine in I'm not sure what you mean. If you mean withdraw, no. Demo account is a demo account. It's just some fake money for you to practice. I'm not sure what you mean. Okay. Um, yes, sell chart 4 hour. Um, Simo, if you're referring to gold, I'm not convinced yet. And Fed will something that will add volatility. And volatility means some swings, like so it could easily stop you out. Be patient. Or if you want to participate and set some kind of a pending order or something, at least use your wisely your stop losses and based on the support and resistance levels that we found out, or based on your strategy. Um, then, okay, that was a really, really strong rally. And even though I didn't want to, in this case, to use any indicators, the fact that is above a 38 is not calling for a bearish bias yet. Still, the 1930 territory is key, is what could trigger a potential sell position. Okay, is what it could trigger a potential sell position. Stop 107. Oh, you were referring to dollar. Oh, this is the selling that you were referring to. Ugh. Okay, I put the 4 hour chart. It's the fundamentals. Okay, the fundamentals are not really the fundamentals. If everything depends on what the Fed will say today, how hawkish or dovish Mr. Powell will be. But theory says that if he hints the pausing of tightening or any, he mentions any cuts, even though today we know that he should announce 25 points hike and if possible another hike, but if he hints that that would be the end, like RBA, remember, RBA increased interest rates, and in the press conference they said, you know what, that was the last time. We have reached to our end. We are at our peak. And that was interpreted as very, very dovish tone from the markets. The markets are ahead of themselves. Remember, they are pricing in ahead of the actual announcement. So everything, my dear friend, will depend on what Mr. Powell will say today. Okay? Indeed, theoretically, a dovish policy is negative for the country's currency. But still, everything will depend on what he will say today. So 102.60 is the floor, the 61.8 Fibonacci level. So if we see sorry, a bearish candle closing below it, that will be a bearish sign if we consider that also our indicators are negatively configured. You can see RSI is at 33, very negatively configured. Um, I don't have my MACD over here, but I have my ATX, for which, as you can see, okay, the main line had 28, so okay, and but it started pointing higher, so that's a bit positive. But on the other side, the the negative DI line is above the green one, which this is the ADX is bearishly configured over here. RSI the same, so negative, negative, and the dollar in the key support level. Okay, so that means if I have to find out the mid of this distance, the mid between this floor and the next Fibonacci level will be somewhere here. So 101.80. Yeah, sorry, I'm gonna confuse you like that, but I would like also to check something else. I've used a Fibonacci extension over here on this swing. Oh my God, it clashed. It clashed. Oh, that's nice. That's very interesting. Have you seen what I have done? I tried to find the mid of this area of this the distance between the 61.8 and the 88.6, and it was somewhere around 101.86, so that was my next support level. And then I use also the Fibonacci swing, the Fibonacci extension over here, connecting from the peak to this latest swing, and indeed it came exactly on my support level. So that indicates that indeed that's indeed a nice support level. 101.86. If and only if we see the asset confirming a break below today's floor. Bonjour. Gold, let's get back to gold again. What you said, high gold going at 1750 or going up 2025. For now, dear Muhammad, keep an eye on the support and resistance levels that we just mentioned. Today's floor and today's highs. If broken, then next support at 1912, and if we see swing higher, next resistance at 1962. Okay, you mentioned 2025 and 1750. So I'm guessing you are a long-term trader or medium medium-term trader. But you mentioned, so I'm gonna clear a bit this mess. You mentioned 1750, somewhere, should be somewhere here. You are a long-term trader, yeah, right? And you mentioned 2025. I'm not saying that these areas are unlikely to be retested. I'm not saying that, but you need to be able to um, support this scenario. You are these are areas that indeed the last 3 years, so since 2020, the gold is like retesting this area, has retested this area several times. But right now is holding at the high territory of the past 3 years. In order to retest the 2025 level, we need to see it turning back to the 2000, right? Okay, so 2000. A reversal back at to 2000, okay, it could bridge, it could boost the asset to 2025 or even higher to 2 years highs in the 2070. Okay, but this is something you should monitor. Now, I will use my trend line because you mentioned also 1750. The asset could retest 1750 if we see it breaking and moving. Sorry, but I didn't put that properly. If we see it in the weekly pace at least, and you see that, if we see it turning back below 1900s. So in order to speculate and move down to 1750, you need to see your asset not only turning below 1900s, but also breaking this trend line that I have used. This trend line is a trend line that shows an uptrend since October 2022. So technically, in order to believe that it could go as down as 1750, we need to see the asset moving below 1900s and breaking and moving below this trend line that we have seen, this up trend line that we have seen since October 2022. Okay, Metal 5, please. How can I add my account to Metal 5? Just, I'm not sure what you're asking. MT4, MT5, MT5, the platform MT5. You need to have a trading account in MT5 if you want to use MT5. If you, this is not what you're asking, please enter our website and we have a live support chat. Click and ask the team over there. What's your view about cable? Oh, I forgot to. I think I'm not sure whether I mentioned the inflation, the UT inflation today. Again, high, very bizarrely, again unexpectedly high, suggesting that whatever the banks are doing is not really fighting inflation. So inflation jumped again higher. and that added a further pressure to the Bank of England tomorrow. Okay, so let's. So that's why we've seen cable. That's why we have seen this jump on the open. It was on the inflation, uh, the high inflation, such as more interest rate hikes from the Bank of England, and um, that's why we have seen pound benefiting of that, benefiting against dollars, so cable jumping higher. But this jump, it's looking that it's running out of steam. We have a bit of a pullback. Nice floor over here, another floor over here. The asset revert to session lows is turning further lower. Let me just check something. Okay, pull back. So the next, if we see this candle closing below 2270, 12270, so the next support area will be on 2240, the bit of this big candle over here. But look at that. Cable is looking at is in a not a precise up channel, but it's in a rally there in March in general. Okay, not the it's to the up it is to the upside. It's in a channel. So a pullback. Okay, this is a 4 hour chart. I had to use the 4 hour chart, the sniper, because I wanted. Actually, let's find the mid of this candle. The mid of this candle is somewhere here. Perfect. So, a move below 2260 could open the doors to 122.20 or even 122 territory. Okay? Here we see cable turning below 122.60, 122.55 to be more precise. 122.55 is the is halfway of the 4 hour session this morning, this jump, the jump that we have seen this morning. A move below 122.50 could open the doors to 122.20 and 122 territory. But this is expected, if this happens, it's expected to be limited move up to this point as well. And in order to retest the lower of the channel before another swing higher. Because let's not forget that as I'm showing over here, is looking that is in some kind of an up channel in general in March. Okay, so my view about cable, having in mind inflation this morning, having in mind that Bank of England is expected to increase rates by 25 points. Um, we might, and having in mind that we have Fed as well. Cable, sorry, I'll run a bit but okay, it might be a bit too early to say that, my dear sniper, but because we need to review again tomorrow after Mr. Powell finish. But having in mind the high inflation, having in mind this risk appetite improvement, the Fed tonight, if indeed increase rates by 25, if indeed Bank of England increases rates again by 25, then the cable could continue benefiting on this calmer, first of all, political situation and if indeed Bank of England delivers the 25 points. With UK, things are a bit weird because UK is not really affected from the banking sector, the banking crisis that we have seen. With cable, other than the high inflation, the other thing that is really key for cable and pound in general is the the politics in UK. I'm referring to Prime Minister Sunak and in general the political situation in the UK. So um, Sunak is a supporter of a less aggressive stance in general, and more precisely on Brexit. So we have some arguments. I mean, some oppositions with the other parties in UK, Mr. Sunak. So the politics in UK uh, could also affect cable. Uh, but if we leave this behind for the moment and focus on the Bank of England, on the Fed, and on the high inflation, cable could be supported further if if because of the high inflation, if the Bank of England and Mr. Bali deliver a hawkish message. But by saying hawkish, I mean to proceed with 25 rate hikes tomorrow, but hit for another one. If that's not the case, and if Mr. Bale comes with a relatively more dovish announcement, uh, that could hurt cable. So keep an eye on 122 territory. Okay? Keep an eye on 122 because a break and a move below 122, look at that, could open the doors to 121 or even 120 territory. So use your Fibos. I found them extremely helpful. It's my thing. I don't know. I don't know. So if I just remove indicators, as my dear Imran is saying, we said intraday guys, 122.50. It breaks 122.20 and 122 could be retested. Now, in the medium term, I'm referring to today, tomorrow, Friday, even next week. We need to keep an eye, obviously, on 122 round number, and if that breaks, then that will take us down to 121 or even 120. Let me just, sorry, that's not proper. 120.45. Okay? If Bank of England sounds quite dovish, that could hurt cable. If, however, um, they deliver a really hawkish commentary and press conference, then this is our resistance for 2 days in a row. Then and a move above it could open the doors to the 123 level, 123.20. That doesn't look good, I know. Let me just, okay. Okay, perfect. Let's move on. Aussie. Aussie, it was quite interesting. We had the RBA meeting as well. A lot of consolidation, I'm afraid, Herr Conke. Let me remove. Okay. Yes, see, a lot of consolidation, keep retesting the 20-day moving average, ranging, fail to extend and move uh, no, above this above the 200-day moving average, to be precise. It's failing to move above it. Momentum is really, really negative. I mean, well. bearish. Can you see how big how far lower, way lower from zero are the is MACD indicators, the MACD lines. The RSI uh, below 50 since the beginning of February. So 50 days in total. So pretty bearish technical picture for Aussie in general. Keep retesting this resistance but fails to break it, and having in mind the bearish indicators, it looks that we might see a pullback with a potential retest of 66 and 65, 60 territory once again. Let me just find it. Here we are. So, so it looks like it could pull back to this level again, while a break of this territory in the long term could open the doors to 2022 lows. Okay, then trading now, a lot of swings, a rally. We have over here some doji candles at this high area over here, and a sharp sell off the last hour, breaking the low of the day, and it's MACD is neutral, RSI is neutral, so this might be limited. Her contact, mm, it's a bit, it's not clear. Let me use my, yeah, neither bearish cross yet, still above pivot point, so a bit is maintaining to consolidation. So you see, zero MACD, RSI at 50, so neutral, stochastic, very narrow, not a sharp slope. Still above pivot. Yeah, it looks like dodgy. It looks a bit that it will continue sideways, bouncing between 66.80 and 67. So yeah, keep an eye on the pivot point. DAX, why is it going to move? Why is it going to move? Is not moving, you mean? It's not moving. It's not moving because all of us, the whole market is waiting for the Fed decision. That's why. But it has moved higher the last 3 days. Boom, another boom, uh, because of what happened with the fact that the regulators, the treasuries confirmed that they will protect depositors if this banking crisis continues, and the fact that Lagarde announced this liquidity measure, that the relief to the stocks and to the fear in general. Yes, so general DAX, dear Marilyn, just daily time frame. So where we are standing, it was a hummingbird, and then it drifted down, it rebounded. So momentum is still neutral. RSI at 53, so there is consolidation, but it's holding gains above 20 and 50-day moving average. So the next resistance is at 15,715, or the upper Bollinger's, which is at 15,812. So momentum is showing some kind of indecision. So it shows that the next few days we might see some sideways movement. But everything is again, we need to expand on the news, guys. We need to monitor it, unfortunately. It's indecisions. struggling us over here. But you see that it's in a range. So this is for a 1 hour chart, dear Mandarin. So look at these highs and these bottoms, okay? So it will remain sideways, fluctuating in between these two candles. So if you are a really dark slabber and you want to, only you are trading dark, I don't know whether you are trading intraday or not, but if you're trading intraday, just keep an eye on any breakout of the fractals or the Bolligers. Sideways. Intraday, though, the momentum is positive, so we might see the asset uh, breaking the high of the day over here, this double top of it in this case. So let me zoom out a bit. Interestingly, very interesting. Flat moving averages. In this case, the next areas, the next resistance areas will be at 15567, 15711. Euro Euro cat. We had the bank, the inflation, really cool, cooler than expected inflation yesterday from Canada. So what we have today is a nice swing, full swing higher from the Euro cat. You see, recover the losses that we've seen in the beginning of March, the beginning last week actually, fully recovered, extended, broken latest high. So momentum indicators are positively configured, all of them. You see MACD, RSI, moving average, the asset that is above all moving average, above pivot, recover in full, one, two, three, four days losses. Right now it's testing the 148 territory. So really overall a bullish bias, what we are seeing over here in this Eurocat um, outlook over here. So the fact that they managed to break this latest swing and extend further higher uh, is, indicates that we might see further bullish movement for EuroCAD. If I put the weekly chart on just to show you that the asset has been in an uptrend since July 2022, so more than a year now. There was some kind of a consolidation, as a correction, like somewhere between November and December, but now it started, like as you look, it has resumed its rally, and it's at um, 1, 2, 3, 4, 5, 6, 7. So it's at 19 months highs. So this is turning the attention to 150 territory. 150, this triple fractal. Can you, this is a weekly chart because we had a strong rally of EuroCAD for more than a year now. And recently, actually, this week, it managed to, not this week only, sorry, in March, it has managed to break 2022 highs and is extending further higher. So that now the attention is turning to this triple fractal, which is back to September 2021 and is at the next resistance area is at 150 and 151 level. EuroCAD, overall the outlook for EuroCAD is bullish. Yeah, above 200 territory, daily moving average of 50, the bullish close of 50 and 20-day moving average, weekly moving average, adding to the positive bias euro CAD. In the daily chart, it's the same conditions, positive indicators, moving averages are all pointing higher. Bolingers are expanding higher. So yeah, intraday, same, some consolidation today, some sideways movement like a correction, but a break and a break above 148, a round number as well, could open the doors to 149, 85, and 149, 70, which are the next resistance areas for euro, CAD, my dear Rafael. Euro CAD, we set up cable, euro dollar, and euro pound. Okay, euro dollar and euro pound are the very last ones. Anyway, guys, this live is remains in the YouTube channel, in the Facebook channel, so you can go back and check the asset that you are interested in. So euro dollar has been in a channel the last week, actually since the 15th of March, so last Wednesday. So it has been an up channel, so and it's quite supported by the 50. And this, sorry, this is 20 simple moving average. Let me just. I would like to have the 50 as well. Okay, nice. So can you see any pullback retested the 20-day period moving average? This is the 1 hour euro dollar. It's in an up channel, well supported by the 20 and 50 exponential moving average. Every time that we got a swing low, we can see the asset tested the 20 and the 50 period moving average and the bottom of the channel. Can you see it? Down was around the moving average and the bottom of the channel, then move again higher, so another higher high, swing lower, retested the moving average, rebounded, another swing higher, the same story and repeats. This is what we've seen this morning as well. We had a bit of a sideways movement correction, retested the 20 exponential moving average, and now it has posted four consecutive bullish candles and is ready to break the mid of this channel with indications that it could post another higher high at 103.30. So as long as the asset remains within this channel, this looks to be this looks that the euro dollar remains a bullish intraday bias. Okay. Uh, Daily chart 1, 2, 3, 4, 5 consecutive positive days, breaking the 1.5 month resistance level. Can you see that? It was the 107 is a key one. 107 it was a key resistance area, but we've seen the last 2 days the asset extending above it. So the next resistance for euro is the 109 level. If it we have a bullish cross, also bullish crossing of the 15 20-day moving average, RSI at 67 and rising. So technically a really a positive bias intraday and in the medium term for euro dollar. Uh, Fami, please visit our website hfm.com. hfm.com. Euro pound, euro pound, euro pound, euro pound. Give me a second, dear Alex. Euro pound. That's interesting. This is the 1 hour chart. Doji at the day's lows. A nice strong candle the last hour. Broke above pivot. Momentum is still neutral. Momentum indicators are basically at neutral. So RSI 50, MACD 0. Stochastic keep pointing higher. No, that's a very mixed intraday picture because look at that. MACD RSI neutral. Fast moving average, so the 5 and 9 flat, 200 and the 51 also flat. Stochastic is the only one that is pointing higher, but we have Bollingers that are pointing lower. So this is a very mixed technical picture here, Alex. So I will skip it because there's nothing to analyze over here. It's very mixed. There's no clear, nothing to help us finding out whether we have more bulls and bears or more bears and bulls over here. So we just go up to the data to see the overall outlook for um, euro pound. So what we have over here is a strong rally yesterday, but still below the 20-day moving average. You see, it was a very, very nice, decisive swing higher, but it held below the 20-day moving average in the lower territory. And the fact that the Bollinger have flattened suggests that the asset is ranging. Mm, no, can still trade the ranging market, obviously, but there's nothing bullish over here. The fact that it failed to break the 20-day moving average and the fact that we see a pullback so far today indicates that it could test once again the bottom of this range, which stands at 0.87, 47 and 0.8725. So overall negative bias, neutral to negative. So remains 1820 remains the key resistance in which the asset failed to break. We have this pullback today with negative RSI below neutral. The pullback today could we could see the pullback today means that we could see the asset testing again the floor of the week. So it is a consolidation of uh, week's floor, lower volume advance area, latest two lower fractals. So yeah. Hmm. Last but not least is dollar yen. Uh, dollar yen. Sorry, sorry. So yen actually in January March, the last 2 weeks, to be more precise, yen found some ground against dollar. We have a swing higher the last 2 days, but you see remains well below all the moving average, well below the 20-day moving average as well. So this looks to be a limited swing higher, okay, limited swing higher. So as long as the asset does not cover this gap down, cannot, as long as it doesn't recover and extend above 154, the dollar again remains negative overall. Let's now check the intraday picture. As I said, the last 2 days we've seen a bounce. We have seen so far today the asset extending further higher, but again below the 133 level. So 133 remains the next resistance area. We are really close to it, but it hasn't managed to break it yet. Stochastic is positive, RSI is positive, MACD is positive. So overall today, it seems that bulls are keep pushing the dollar yen higher. If the asset managed to break the 133 level, then the next resistance, the next resistance area is at 133.50 and 133.60 levels. If I zoom out, yeah, that is coming in line with last Wednesday's highs as well. So yeah, keep an eye on any potential break above the 123 that could lead the dollar again retesting the next resistance of the day. So around 123.50, 123.60 territory, considering that momentum indicators intraday are also positive. So moving averages are pointing higher as well. You see that? Pointing higher, Bollingers are pointing higher. Um, the asset is well above its pivot, but it's positive. RSI 68 and keep rising. Stochastic 80 is still pointing higher. So yeah, bullish bias intraday for dollar yen. But the overall outlook, the daily chart as I showed earlier, remains to the downside. Guys, I'm gonna call it a day. We are more than an hour live. If you don't have any further question, I'm gonna call it a day. So as I said, all the attention is on Mr. Powell today. Keep an eye on it. It's a very volatile event. Also tomorrow, we have Swiss Bank, we have Bank of England, along with the press conference of obviously. And in the afternoon, we have the unemployment claims and new home sales from Europe. Friday is also quite busy as well. It's the PMI day from Germany, France, Europe, UK, US. We also have Canadian retail sales, durable goods from US as well. So another massive. Uh, so the Thursday and Friday are also packed with data. So that's pretty much it. Thank you very much for attending. Hope you're having a great day ahead. Take care. We're gonna see you again, possibly on Friday. Thank you very much. Bye bye.